Good morning, good morning, good morning. Welcome to today's morning blast. It is Thursday, the 24th of July, all day. Still none the wiser of how we got this far through July, but there we go. You join myself and Michael Brown, where we give you a review of yesterday, a preview of today, in terms of markets and what to expect, and probably a bit of us kind of having a bit of a rant and just getting old and just giving up on the world, basically. But before we do, let's get the legals out of the way. Nothing discussed in the Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Hello, Mr. Michael Brown.
Very good morning to you, Ryan. Good morning, everyone. Happy Thursday. We are very nearly at the end of another week.
Yes, exactly. Well, almost, mate, almost. I'm almost tempted to call on a synthetic Friday, and I would if I wasn't so fucking busy. It looks like I might have to work on a Friday for once.
Oh my word! It
I
must be decades since you had to do that.
Well, I forgot what one looks like. But,
Uh,
enough about me.
yeah, indeed. Well, I'll spare a very brief thought for you while I'm out for lunch on the seaside tomorrow. Don't worry.
Oh, get you.
Anyway, enough about our social lives. Let's
Yeah, exactly.
crack on. It was very much a case of the risk rally rolling on yesterday. The S&P 500 adding about 0.8%, the Nasdaq adding about 0.4%. Although we have seen futures slightly softening in early trade this morning, giving up some of the overnight gains, and that comes after relatively mixed megacap earnings after the close last night, which I'll get onto momentarily. But the main positive driver of sentiment throughout the day yesterday was news that the EU and US are reportedly closing in on a trade deal which would set a tariff at 15.15%. But importantly, according to the sources that were cited by both the FT and Reuters, tariffs could be waived on certain products, including aircraft, medical devices, and spirits. Of course, this follows and really continues the sort of wave of trade positivity that we saw earlier in the week after the US and Japan agreed a trade deal. And it very much seems as if the US-Europe trade deal is now the market's sort of primary focus, with that being the next big one to get over the line before the current threat of higher tariffs, which are due to come into effect on the 1st of August. But of course, the can could and likely will be kicked down the road on that front once more. Despite the US and EU reportedly making progress towards a trade deal, the EU continue to ready contingency plans. As we said on the morning blast yesterday, this is really unsurprising, and in fact what the EU should be doing in preparing for every eventuality. Bloomberg citing sources yesterday that saying that in the event that there was no trade deal, the EU would be prepared to impose a 30% tariff on 100 billion euros worth of US goods, only if no deal is reached and the US implements its planned 30% levy on imports from the
So
EU. So
just on this, right?
go on.
So you say that, yeah, this is what they should be doing. And I'm glad Angie's just turned up because this goes along with what something me and Angie have been saying. You say the EU should be looking to kind of make retaliatory measures. I disagree. I
Oh, well,
think that,
hang on.
okay,
Let me, no, I think my words may have been misconstrued there.
well, I mean, you say words must be, I've literally repeated back what you've said.
I don't believe retaliatory measures are a good thing to be doing, because it is akin to shooting yourself in the foot if you impose,
Yes,
retaliatory
I'm
tariffs.
glad we
What
agree on
I
that.
what I do think is prudent is that the EU are at least going through the motions to prepare those measures, because it shows the US side and anyone else who's watching that they are taking that threat seriously and that they are working towards all potential outcomes.
See,
So I think it's all a bit of game playing,
yeah,
basically.
but see, honestly, and again, I'm glad Angie's turned up to back me up on this. I know no one can hear her, but there you go. I think the best thing that Europe could do, or sorry, the EU could do, we voted out, etc., is to do fuck all, or to keep it at least very, very quiet. Because if Trump gets wind, or if Trump's, if it's an easy thing for Trump to do is for him to turn around and say, "Oh, the EU are looking to stick 30% tariffs on us, boss. There you go, here's 30% tariffs on you too." But if the EU stay quiet, Trump has no leverage, right? Do you get me? So if they stay quiet and they say, well, look, you can do whatever you want, mate, but we're not going to impede ourselves, and we're not even going to give you ammunition to impede us. Trump's going to make up his own mind regardless. Why add fuel to the fire? And I think this is what we've seen with Japan. Japan have basically just in terms of like a blinking, in terms of a staring out competition, Japan just didn't blink. Not only that, they had the elections going on, and Trump's gone, well, hang on, fuck, I need to announce some decent trade deals here. For one, people were getting a bit frothy about Epstein files again. Oh, here you go. Not only have we given you a good rate, but we've given you a carve out for autos. Now, Japan have just played an absolute blinder. I think the worst thing you can do with someone like Trump is to antagonise him or give him any ammunition whatsoever to fire back at you. So personally, and again, it takes two to make a market, and we usually agree, but I think the worst thing the EU can be doing right now is publicly going on about retaliatory tariffs and what they intend to do if they don't get what they want. Because that's just, we've seen time and again, that's not how you play the Trump administration. But that's just my opinion. Anyway,
Well,
sorry.
the other thing I would say is all of this is probably going to be moot anyway, because the can will get kicked down the road in
Oh,
some way, shape,
absolutely.
or form. So,
Yeah, no, absolutely.
yeah. And speaking of which, actually, we might as well move on from that, because I was discussing this just a moment ago on another call. The one country that I think could be in a bit of a pickle on the whole tariff front, particularly when it comes to the can being kicked down the road, is Brazil. Because, of course, what's going on between the US and Brazil is not purely a trade dispute, it's also a very political dispute where Trump is effectively throwing tariffs around because his mate Bolsonaro is being chased after by the Brazilian government and the Brazilian police. And we had news yesterday from the Brazilian the Brazilian local media, noting that the government in Brazil sees, quote, a remote chance of the proposed 50% tariff on Brazil being postponed. That is, of course, also due to come into effect on the 1st of August. Apparently, the Brazilian authorities sent a letter to the United States on the 16th of May, outlining their negotiating position and requesting talks to begin based on a list of products that they would be prepared to discuss. And the US just hasn't bothered to reply to it. So I think even if we do see the can kicked down the road in most instances, I think Brazil could be in a little bit of trouble, given that there are sort of other factors at play other than just the tariff and non-tariff barriers that the
Yeah.
administration harp
And
on about.
I do think Brazil's that special case because we know it's, if anything, it's more, um, it's more to do with a political disagreement than anything else. There's nothing really related to trade on this front.
Yeah, and if Trump's going to try and make an example out of anyone, then that's the obvious one to pick, isn't it, at this
Yes.
point?
Yeah, exactly.
Away from trade, plenty of other catalysts to get through from yesterday. In terms of data, we had a better than expected consumer confidence print out of Europe, that at minus 14.7 in June, up from the prior minus 15.3. We did, though, have a worse than expected existing home sales number out of the US at 3.93 million, down from the prior 4.03 million. Of course, neither of those releases especially market moving. We also had a 20-year Treasury sale yesterday. That stopped through the when issued by a fairly sizable 1.6 basis points, which is pretty good in the case of any Treasury auction. It's even better when you consider that the 20-year segment is by far and away the most unloved part of the curve. In terms of other catalysts from yesterday, going back to the Trump administration, we heard from Treasury Secretary Scott Bessent, who was giving his now seemingly daily round of media interviews, repeating all the usual rhetoric on the trade front. I think one interesting remark that he did make was that he was speaking on the Fed, of course. He noted that the process for replacing Chair Powell and Governor Kugler is being run simultaneously. Of course, both of these board spots open up early next year, Kugler in January and Powell in May. The reason I flag this is because Bessent was also talking about, how many candidates there are in the mix, whether they be from academia, whether they be currently on the Fed board, or they may even be a current regional Fed president. The reason I bring this up is because if you think back to the first Trump administration, which is quite a long time ago, the way that they handled Fed nominations was quite interesting because they tended to sort of pair up a conventional pick, someone like a Bowman or a Waller, with frankly, a complete and utter lunatic, someone like a Stephen Moore or a Judy Shelton type character, in an attempt to try and increase the chances of the latter receiving confirmation in the Senate.
Yeah,
So I
yeah,
just
yeah, yeah.
wonder whether we see, that sort of ploy happen this time around. Of course, the other thing to remember is that the Senate is apparently much, much less likely to say no to Trump's nominations this time around. I believe, apart from Matt Gaetz, every single person Trump's nominated has ended up being confirmed, whereas in the first administration, it was very much a case of there is a line and senators will defend that line, but that doesn't seem to be the
And
case anymore.
who appears to be, well, at least making a late charge for the line is that clown Polt.
Oh,
from Fannie and Freddie Mae.
God, he's a
I
fucking
mean,
moron.
I know he is, but he's definitely making a play. He's basically on his knees at this point. Gobble gobble. But yeah, what's that on your chin? Yeah, excellent.
Oh, no. Oh.
um, but no, it's ridiculous. But
He's
this guy
taken
is
Monica Lewinsky's spot under the desk.
there. You go. But yeah, he's an absolute. I'm not going to use the word I was going to use. He's an absolute dickhead. But yeah, it'd be an interesting one. Again, there's a lot of people putting their hats in the ring and just, I was going to say suck it up to, but basically sucking off Trump. So yeah, an interesting one. We'll see what the markets say.
Yeah, absolutely. Moving on from that, slightly crypto related news. So hopefully Cam is here who can rescue me on this one. But Goldman and Bank of New York Mellon, they are going to offer something called tokenized money market funds. Apparently BNY clients will be allowed to buy tokenized money market funds using Goldman's blockchain. This is according to CNBC and is for institutional investors only. So good for them. Here in the UK, very, very good news yesterday, actually, on the legal front. Tom Hayes and Carlo Palumbo. If you don't know those, if you
Yes.
don't know those names, go and read the book Rigged by Andy Verity. It is a brilliant read. Essentially, to cut an incredibly long and complicated story quite short, these two were ultimately scapegoated back in the early 2010s over the whole LIBOR situation. These two were prosecuted and went to prison, accused and at the time convicted of rigging LIBOR. At the time, the story was very much framed around greedy traders trying to boost their P&L. Actually, as history transpired and the full story came out, it turned out that not only were they not trying to boost their P&L, because it actually worked in the opposite direction, what was actually going on was that these guys and all the other LIBOR submitters who were involved in the whole situation were being instructed to submit lower fixings first by their own bank's chief executives and then by the Bank of England and by His Majesty's Treasury. So it is absolutely long overdue that these two have had their convictions quashed. In fact, the UK was the
Yeah,
last jurisdiction
absolutely.
to do so. They were quashed in the US some time ago. Sadly, my expectations that the folk who were actually responsible for all of this are ever brought to justice are very, very low indeed. But I suppose at least it is absolutely brilliant news that these two can finally clear
Yeah,
their names and move on with the rest of their lives.
I echo that. Long overdue. I've actually got a very dear friend that was also involved in the libel, so pleased that means he's definitely not getting a tap on the shoulder. Just for those very brief TLDR for those not aware, basically these guys were getting accused of causing the global financial crisis at one point. That couldn't be further from the truth. They were pricing interest rates to the tune of like the fourth decimal place. And nearly always slightly lower, slightly more in favour with what Her Majesty's government and the Bank of England wanted. So, yeah, when that all got found out, to then just say, check the tapes, look, this is what was said here, it's just an absolute carve up. So heads should be rolling, but needless to say, they won't be.
Yeah, it was very much a case of those two, and I stress various others being thrown under the
Yes.
proverbial bus, and the folk who were actually behind that, funnily enough, getting away with things scot free. But yeah,
Yes.
hopefully a line can now be drawn under that very, very
We hope
sorry
so.
affair. Moving on from that, we obviously have megacap earnings after the bell last night. Alphabet delivering top and bottom line beats, also beating on cloud revenue as well. The shares initially popped about 2% in after hours trade, but relatively quickly gave up those gains. And the reason for that was because Alphabet boosted their financial year capital expenditure expectations from a prior 73 billion all the way up to $85 billion. This is unsurprisingly primarily coming as a result of increased investment and expenditure in the AI complex. So although that news did pose a bit of a headwind to Alphabet stock, it did allow companies like Nvidia and Broadcom to gain after hours. Certainly seems that the AI arms race is not slowing down anytime soon. We also had earnings out from Tesla yesterday. Tesla delivering top and bottom line misses. Also a big miss on free cash flow as well. And then Elon Musk in the earnings call was talking about a few very rough quarters ahead. Tesla really running out of charge after hours yesterday
Yeah.
as a result of that. Although sticking with Tesla, Before the earnings report, there were reports via Bloomberg that apparently Tesla and officials in Nevada are in early talks around offering the robo-taxi service within the state. And on which note, I will finish on this story, sticking with robo-taxi testing. The Morning Blast's favourite stock, Pony
Pony
AI.
AI.
They have apparently started to test their 7th generation robo-taxi on the roads in Beijing. So good for them.
Giddy up.
It remains the one that got away.
Giddy up. Michael, thank you for that. So let's just rattle through some overnight news headlines, courtesy of Zach and the Overnight News Roundup. As always, do subscribe to that. It's the best way to catch up with all the market moving news that's not on the podcast. Starting off with trade, as we know, President Trump said they will have straight, simple tariffs of between 15 and 50% on countries. Bit of a wide market there. We've made wider. He said the US is in a serious talks with the EU, and if they agree to open up to US businesses, they will let them pay lower tariffs. He also said that US will mostly be charging straight tariffs to most of the rest of the world, whilst also noting that they're in the process of completing a deal with China. European officials, they expect a potential deal with the US for a 15% baseline tariff. Would be a flat rate across everything and wouldn't be added on top of levies that existed before Trump started raising tariffs this year. This is different from the current situation, which is 10% blanket tariff, which was layered on top of existing tariffs. So the keys and the key to this will be in the details whenever we get any details. Japan's negotiator, their chief tariff negotiator Akazawa, said there is no difference in the understanding between Japan and US regarding the trade deal. Akazawa said that there had been no discussions with President Trump or US officials about how to implement the deal, and that Japan is not currently considering signing a legally binding agreement. China. Imports of three major energy products from the US hit almost zero in June, a potentially sensitive shift as Beijing and Washington resume talks to resolve their differences on trade. On energy imports to China, we do know obviously they're carrying on importing from Iran, and this is a bone of contention for many, not just the US. Moving to Australia, they intend to remove restrictions on US beef imports in a bid to appease Trump, who had highlighted Canberra's biosecurity measures as an unfair impediment to trade. Vietnam, they estimate its exports to the US could decline by as much as a third if higher tariffs announced by President Trump take effect. That's according to an internal government assessment. Moving to Europe, the ECB, the European Commission President von der Leyen, not the ECB, the EU, von der Leyen called for an essential rebalancing of trade ties with China during a tense summit on Thursday, with President Xi saying ties stood at a, quote, inflection point, according to a poll report. So see what we get there. Obviously, the Trump administration will be watching these words that come out of this meeting, this powwow between the EU and China very closely, because one thing they won't like is to see if they discover or they get the sense that the EU and China are getting buddy-buddy. Moving to Brazil and Mexico, leaders of both those countries are looking to broaden trade ties as the US tariff concerns deepen for both export-driven economies ahead of fast-approaching deadlines set for President Donald Trump. In macro news, Trump will visit the Fed today. That's according to the White House, a surprise move that escalates tension between the administration and the Fed. What this means for markets is that everyone will be staring at Truth Social and the news wires for any quotes out of Trump, because he's not.
Oh, sorry, go on. No, go on. Finish what you're going to say, and then I'll jump in.
No, I was just going to say there's no chance he's going to be quiet today, and there's going to be every chance that he kind of slags off Trump, slags off Powell and the Fed.
Oh, yeah, very much so. The visit isn't until 4:00 Eastern, so it will be after the market closes. What I was going to say, though, is I just find it slightly hilarious how a bloke who has covered entire fucking skyscrapers in everything gold is going to walk around and slag someone off for buying marble and granite.
Well, I did think that. Maybe they want.
Irony is not dead and all that.
Well, maybe in Powell's personal office, maybe he's got a gold-plated toilet. I don't know. I've not been invited in there yet. But anyway,
give it time.
Yeah, House Republicans are moving forward with plans to pull US funding from the International Energy Agency, saying the group has abandoned its objectivity when it comes to projecting the growth of clean energy. Bank of Japan watchers, they increasingly expect authorities to raise the benchmark interest rate either in October or January. That's according to Bloomberg survey conducted before Trump announced a trade deal with Japan. Speaking of the BOJ, there is a good chance the BOJ will hike interest rates in October following the Japan US trade deal, providing a buying opportunity for Japanese government bonds. That's according to Rizona Holdings CIO. No idea who they are. Sticking with Japan,
Makes
the
two of
Topics
us.
Index. Yeah, Japan's Topics Index climbed to a record high on Thursday, and Nikkei share average hit a one-year peak as stocks rallied for a second straight session after Tokyo struck that long-awaited deal. The Chinese Sovereign Wealth Fund, Central Huan Investment, they pumped in around $27.6 billion, that's with a B, into exchange traded funds in the second quarter, pushing back, everyone loves a good pushback story, against the stock market rout that has followed Trump tariff announcements. Moving to Europe, new car sales in Europe fell more than 5% in June. That's according to the European Automobile Manufacturers Association. They said that this morning in reflection of the global challenges faced by automakers. Moving back over to the Pacific, our antipode. In Australia, the RBA Governor Bullock said a measured and gradual approach to monetary policy easing was appropriate as the labour market had only eased slightly, shrugging off concerns about a recent jump in unemployment rate. Staying over that way, our friends in New Zealand, the RBNZ's Conway, said that the bank is ready to cut interest rates further if the outlook for price pressures continues to soften as expected, warning that US tariffs are likely to dampen economic growth. South Korea's economy rebounded at a stronger than expected pace in the second quarter, despite headwinds from President Trump's tariffs. What else we got? Yield premiums on Asian investment grade dollar bonds. That's dropped to a record low, joining a wide regional rally in risk assets spurred by the easing trade tensions and strong corporate fundamentals. So just one headline geopolitically. We've seen some escalation between Thailand and Cambodia, so one to keep an eye on there. One of these that it won't matter to markets until it does. Hopefully it doesn't. One other thing, just briefly, Taiwan president has escalated his power struggle against opposition lawmakers by backing an unprecedented effort to unseat more than a quarter of the island's
Parliament.
legislators in a quote recall vote. So one to watch there. In equity space, Tesla posted its worst quarterly sales decline in more than a decade and profit that missed Wall Street targets, but its profit margin on making cars was better than many feared. CEO Musk said the US government cuts its support for EV makers could lead to a few rough quarters, quote, for the company before a wave of revenue from self-driving software and robots, etc. Okay, mate, just on this as well, I did see, I think it was like their free cash flow or whatever it was. I think the market was expecting something like $700 million and they only had like $100 million.
Yeah, it fell off a
So
cliff.
things are looking very, very ropey there. Alphabet shares ultimately firmed after the Google parent company raised its capital spending plans following a strong beat on Wall Street estimates for quarterly revenue and profit. Trump said he's considering breaking up Nvidia Corp to increase competition in artificial intelligence chips before finding out, quote, it's not easy in that business, unquote. So basically Trump talking bollocks and then
Fucking
being called out
classic
for it.
Trump, isn't it?
Yeah,
I'm going to
exactly.
do something
Says
I know
something.
nothing about.
Yeah, and they go, oh, actually, it's a lot more difficult than I thought. Absolute wrong. And IBM, they beat Wall Street estimates for a second quarter revenue, profit, and lower expected sales in mainstream software segment, overshadowed by renewal in demand for mainstream business. T-Mobile, they raised its annual forecast for postpaid net customer additions on Wednesday and added more wireless subscribers than expected in the second quarter. Chipotle, the Mexican burrito place, lowered its annual sales growth target again, missed quarterly sales estimates as economic uncertainty prompts Americans to dine out less. So the arse has fallen out of that one, which is quite ironic because apparently it gives everyone the shits. Total Energies, they reported a 23% fall in second quarter earnings, the French oil major's worst performance in 4 years. BNP Paribas, they expect revenue and profit growth, to accelerate in the latter half of the year, following second quarter results that top market views. Sticking with European banking names, Deutsche Bank backed its outlook after it reported better than expected second quarter results. What else we got before I hand back to you? Stick with banking. Lloyds Banking Group confirmed its full year guidance after reporting better than expected second quarter profits on lighter costs and resilient income from interests. And finally, from me, Hyundai Motors earnings fell in the second quarter, weighed by increasing market costs and higher US tariffs. So tapping the brakes on that one. And back to you in the studio.
Very good. Thank you, Ryan. In terms of today,
You're
then,
welcome.
in 4 minutes' time, we have the latest flash PMI figures out of the Eurozone, which are likely to show a modest improvement in both manufacturing and services output in the month of July. Half an hour later, at the bottom of the hour, we have similar figures from the UK, which are also likely to show a modest pickup in conditions in both sectors. The main event of the day, though, comes at 1:15 this afternoon with the latest ECB policy decision. It is going to be a complete and utter snoozer, to be completely honest with you. The deposit rate will be held steady at 2%. Money markets pricing absolutely no chance of any move whatsoever. The policy guidance will likely remain unchanged, with the ECB repeating that they will continue to take a data-dependent and meeting-by-meeting approach to policy decisions while making no pre-commitment to a preset path of monetary policy. At the post-meeting press conference, the most interesting thing will probably be whether or not my doppelganger appears, but President Lagarde will probably keep her options open as much as possible while repeating the rhetoric from last month that policy is in a good place, and again refusing to make any comments on the strength or the recent strength that we've seen in the euro. Frankly, it's very, very difficult to imagine the ECB being a market mover today. Other events on the docket at 1:30 this afternoon, we get the weekly US jobless claims stats. Note that the continuing claims print this week pertains to the July non-farm payroll survey week. Of course, that July jobs report due next Friday lunchtime. Also this afternoon, we have retail sales figures due from Canada, new home sales stats out of the US, and of course that Trump visit to the Federal Reserve that we were talking about earlier on. And then lastly, in terms of corporate earnings today, it is airlines that dominate before the market open, with both American Airlines and Southwest reporting before trade gets underway. And then after the market close, the most notable report comes from Intel. And of course, other than that, usual reminder that any trade or tariff or geopolitical headlines throughout the day will also continue to be closely watched. And that is all from me for the time being.
Wonderful, Mr. Michael Brown. Thank you so much. Listeners, we all know everyone loves a good blast, so I hope you've enjoyed this one. Whatever you're doing today, keep it tight, stay safe, and we'll see you all tomorrow. Much love.
Bye for now.